So we were discussing cash flow statement, and yesterday we have understood the accounting treatment of interest and dividend. I will again revise it for once, so that my purpose is that you should not get confused with interest and dividend at any point of time. See, either we can pay the interest or we can receive the interest. So if I am paying the interest, that is only because of financing activity. In normal circumstances, we will always be assuming in the questions non-financial organizations. Non-financial organizations. So, but for financial organizations, for the firms which are of financial nature, like banks, financial institutions, if they are paying interest, it is their operating activity. It is their operating activity because their main revenue is interest and their main expense is also interest, because they have to pay interest on fixed deposits, also on recurring deposits, on saving accounts. Each and every type of funds, whatever they are accepting, they have to pay the interest. So if a financial enterprise is paying the interest, it will be an operating activity for it. But if a non-financial enterprise is paying the interest, then it will be a financing activity. Now coming to the interest received portion. So if I am receiving interest and my nature of enterprise is financial enterprise. Again, interest is the main operating revenue for a financial enterprise, so it will be again an operating activity. But for a non-financial enterprise, if it is receiving the interest, so the receipt of the interest will be only and only because of the reason that they have invested their funds in some financial instruments. Either it can be shares, it can be debentures, it can be any short-term securities, government bonds, anywhere, in any bank FD. So if you are receiving any sort of interest, that is only because of your investing activity. So these two portions are discussed now for interest. Now I'm coming to the dividend. Again, dividend can also be of two nature only. Either you will be paying the dividend or you will be receiving the dividend. If you are paying the dividend, then obviously it will be always and always because of your financing activity, because you have issued the shares for your capital, and for that capital you are paying the dividend to the shareholders. So if you are paying dividend, it will always be an operating activity, whether it is a financial enterprise or a non-financial enterprise, but it will be always financing activity. But if you are receiving dividend, then it will be again only and only because of the point that you have invested in some shares, and that's why you are receiving the dividend. And if you are investing in shares, that means if you are investing in shares, so that means you have invested your money. And if you are a non-financial enterprise, it will be of investing activity. But again, as regards financial enterprise, their main operating activity is what? Their main operating activity is that they can accept the deposits, they can disburse the loans, and they can deal in the securities. So they can, this is their main operating activity. Buying and selling of securities is their main operating activity. So whatever dividend they are receiving as interest, like dividend, will also be their operating activity. So please go through these points in detail each and every day, so that you should not feel confused yourself as we will move further. Then further we have practiced that how to classify any transaction into operating, investing and financing. Yesterday we have practiced that also, and we have understood that which transactions will be covered in operating activity, which will be covered in investing, and which will be covered in financing activity. So operating activity is the main revenue generating activity of any enterprise. Like if we take the example of an insurance company. So for an insurance company, the acceptance of insurance premium will be of operating activity. However, if they are paying the claims, that will also be an operating activity. For banks, the main operating activity is accepting deposits and giving loans, paying interest and receiving interest. For a non-financial enterprise, it will be a manufacturing of some article or trading of some article, buying and selling. This all will be a part of operating, investing and financing activity. Now, in the beginning of this chapter, we have again discussed whether cash can be or outflow or cash can be inflow. So we have to practice this also. We should be knowing with the help of which transaction it will be resulting in inflow of cash and when a transaction will be resulting in outflow of cash. And there may be third situation also that it will not be resulting in inflow or outflow of cash. So we have to practice this topic also. Now see the first point. It is saying conversion of debentures into equity shares by a financing company. So when you are converting your debentures, now conversion of debentures is not a topic in syllabus, but we should be theoretically knowing it, that you have studied at the time of debentures. Convertible debentures are there. So convertible debentures are those debentures which can be converted into equity shares or preference shares or any types of debentures itself. So when I'm converting the debentures into equity shares, I'm not getting any cash, because once I have issued the debentures, at that time I have got the cash. Later on, what I'm doing, I'm simply converting these debentures into equity shares. So I will not be getting any cash further. So this will be resulting in no flow. This will be resulting in no flow. Why? Because only both items are related to non-current items. So both are of non-current nature, debentures also and shares also, and they are not generating any cash. That's why it is only mere a conversion of the form. Now second is declaration of dividend. When you declare the dividend, it is not that you are paying the dividend. What is the process of declaring dividend or dividend distribution? I should make you clear. Okay. Now, first thing is that company will prepare its profit and loss statement, and then company will came to know about its profit. What is the status of its profit? Then, after thinking over the various factors which you have studied in BST, factors affecting dividend decisions, according to that, all factors, company will decide what dividend they should pay, how much dividend they should pay. And on the basis of that decision, they will declare that how much dividend they are going to pay. That is called declaration of dividend. At that time, they have announced their financial results, and they have also announced that how much dividend they will be paying during the year. So this is just a declaration of dividend. After that, within 1 month or within few days, they will be issuing the checks or they will be transferring the money direct into the bank account of the shareholder. So when you declare the dividend, at that time, you are not paying any cash. That's why it will result in no flow. So you can write here declaration of dividend does not mean that it has been paid. So you have to think about the transaction and then only you will be able to decide whether it is outflow of cash or inflow of cash. Simply, if you are receiving cash, that will be inflow of cash. If you are paying any cash, that will be outflow of cash. Now see the third case. Third case is saying sale of marketable securities at par. Now you are much familiar with this term, what is at par. So suppose I have purchased a marketable securities earlier for rupees 100 and now I am selling it for rupees 100. That is called sale of marketable securities at par, that I am selling it at the face value. No, I am selling it, obviously you can think that I will be receiving the cash. I will be receiving the cash. But what is the source of cash? You can see in one of our heading is cash and cash equivalents. And cash and marketable securities. Cash and marketable securities both are component of cash and cash equivalents. So what is happening? Your cash balance is increasing and your marketable securities balance is decreasing. But both are component of same heading, cash and cash equivalents. So there will be ultimately no change in the cash and cash equivalents balance. So because there is no change in cash equivalents balance, that's why it will again result in no flow. It will result in no flow. Because it is movement between items of cash and cash equivalents. Both are components of cash and cash equivalents. So one is reducing and one is increasing. That's why it will ultimately result in no increase in cash and cash equivalents. Now, next is interest paid on debentures. So when you will be paying interest on debentures, obviously you will be paying it through your bank account. Your bank balance will reduce. Your bank balance will reduce. So it's payment that will result in outflow of cash. That will result in outflow of cash. So it involves payment. It involves payment of cash to debenture holders. Okay. Now next is deposit of cash into bank. Deposit of cash into bank. I have opened the chat box. I will ask that you should reply for this. What do you feel, whether it will result in inflow or outflow or no flow? Think and then answer in chat box. Let's see how many of you are listening and understanding it. Yes, very good, very good. Yes, very good. Okay, fine, fine, very good. Yes, okay, okay, okay. Yes, very good. See again, cash and bank, both are components of cash and cash equivalents. Cash and bank, both are components of cash and cash equivalents. So what will happen when you are depositing cash into bank? The journal entry will be bank account debit to cash account. Your bank balance will increase and your cash balance will decrease. So ultimately, there will be no change in the balance of cash and cash equivalents. So it will be resulting in no flow. And the reason will be same because it is also a movement between items of cash and cash equivalents. So it will also result in no flow of cash. See, when you will be able to understand these transactions, only then you will be able to classify the transactions into various segments, and then only you will be able to attempt the full-fledged question. That's why you will find many illustrations are there in your book for these topics, for classifying the various transactions into operating, investing, and financing, for classifying whether it will be outflow or inflow or no flow. So first go through them, just practice them, read the theory, then we will be able to proceed in the chapter and we will become proficient in this chapter also. It's a very interesting chapter, but it will create a lot of confusions if you will not go step by step. Okay. Purchased machinery for cash rupees 80,000. Now I have purchased a machinery and I am paying for it through my bank account, obviously. So what do you feel, whether it will be inflow or outflow or no flow of cash? Yes, very good. Very good. Very good. Very good. Obviously, it can be simply understood that it will be a outflow of cash because cash has been paid for the machinery. So your cash and cash equivalents will decrease by cash and cash equivalents will decrease by rupees 80,000 here. Now next is paid to creditors rupees 40,000. Paid to creditors rupees 40,000. Whether it will be a inflow, outflow or no flow. Yes, very good, very good, very good, very good. Yes. So I hope now you have understood the concept. It will also be outflow of cash and the reason will be same again. Your cash and cash, the chat box is open. If you are, any one of you is sending message on WhatsApp, please reply in chat box. So then it will be again, cash and cash equivalents will reduce by 40,000. Obviously you are making payment to your creditors. So it will decrease your cash and cash equivalents. Okay, now next is converted rupees 10,000 equity shares into 9% debentures. Let's see how many of you can answer it properly. You are converting your equity shares into 9% debentures. Yes, very good. Very good. Very good, very good. It will be a no flow because just the form of equity shares is changing to the debentures. You are not getting any cash and you are not paying any cash. So the reason you can write here, both items are related to non-current items. When there will be a movement between non-current items, then there will be no flow of cash. Okay. Now next is received cash, rupees 30,000 from trade receivables. Now whether it should be inflow, outflow or no flow. Yes, very good, very good. You are receiving cash from your debtors, or you can say bills receivable. Two components are there for trade receivables. In this way, your balance sheet also get revised. If you will think over about that, where I will be showing the creditors, where I will be writing the debentures, where I will be writing the equity shares. If you will try to observe these points also, you will get a practice of your balance sheet also. Okay, it will be an inflow because your cash and cash equivalents will increase by 30,000. Will increase by 30,000. Okay. So next is issued equity shares rupees 1 lakh for cash. When you are issuing equity shares, you will be getting money and you will be giving shares. So obviously, it is a movement between non-current and current. It is not a movement between non-current items. So you are getting cash. Obviously, your bank balance will increase. So it will be resulting in inflow of cash. And the reason will be cash and cash equivalents will increase by 1 lakh. If any point is not clear, you can ask. If any doubt is there, I hope each and everything is clear. Building purchased. So when you are purchasing building by issue of shares, now see practically, now you will be able to make the difference. You are purchasing building and you are issuing shares. So building is a part of non-current assets and shares is a part of non-current liability. You can say shareholder fund. Shareholder fund and non-current liability both are of long-term nature. So again, it will not result in any flow. So no flow. No flow will be there. Because it is again both items are non-current of nature. So I can write the reason same here. Both, sorry, this is not this one. This one. Both items are related to non-current items. Because see, now this is purchase of an asset for consideration other than cash. So you can revise the accounting treatment also. You can revise many things. Yes, very good. Now furniture costing rupees 25,000 sold for rupees 30,000. Furniture costing rupees 25,000 sold for rupees 30,000. Yes, now it will be resulting in inflow, outflow or no flow. Now see, you are selling a non-current asset, furniture you are selling. And obviously what you are getting some money. Whatever cost was there, you may get 20,000, you may get 15,000, whatever you are getting, that you are getting in cash. So even you are selling it at loss or even you are selling it at profit, it doesn't matter anything. It will be resulting in inflow. So don't get confused with the profit or loss. Ultimately, you are receiving cash and we are concerned here only for the whatever the cash I am receiving. So cash and cash equivalents will increase by how much? Increase by 30,000 because you will receive ultimately 30,000. I hope this point is also clear how much increase is there because we will need this point also in the coming topics. In the next lecture, very important topic is there, so please don't miss it. I will request. Providing depreciation on fixed assets. Now depreciation is a non-cash expenditure. If you remember its nature, depreciation is a non-cash expenditure. When you are depreciating your fixed asset, you don't need to pay anything to anyone. So it will result in no flow. It will just reduce your value of your fixed asset. No involvement in cash and cash equivalents. Last is issue of bonus shares. So bonus shares are issued out of profits. Bonus shares are never issued for cash. Remember this point and note it down somewhere so that you should not confused in future also. Bonus shares are always issued out of retained profits, reserves of the company. So it will again